The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi everyone, Basil Chapman, Tiger Technicians. My pleasure to be here Monday through Friday, 11 o'clock till noon, 877-927-6648. Thank you to our hosts earlier on. Let's try to keep up that high standard. The Dow is up 137. Let's just do this with the E-mini futures to show you something. See this pattern that I call the falling axe with lower highs and much lower lows? The E-mini this morning went very close to that downtrend line. It's pulling back a little bit. You see the MACD, the moving average convergence divergence, it is making this W pattern, which suggested to me that there could be some kind of a bounce. Two reasons why I thought that. The stochastic was holding okay. I still believe that we're in the consolidation phase. It should last a little longer. But this is what I was thinking. See the weekly chart, first time that the prices pulled back quite sharply ever since the 2015 summer high back in August, and then there was quite a sharp pullback. So this is the one that we had back in December, January was just really sideways. Now we've broken a little bit below the 9-period moving average, gone back above it. What's really important about this particular phase here is the 120-minute chart. This is a leg C. I could call it an alternate count. I'll treat it as a C right now, but I wouldn't be surprised if some of it, quite a bit of it, could be given back a little later on. I'm going to go through this one at a time because it's so important right here. So the E-mini is suggesting that at 23.69, up 13, a break into the 23.83 level has to be respected as something really important. That is a close up in that area. Why? Because then you start to get this arch formation, also V-shaped formation. And then it also says that the downtrend line in the weekly dashed gray trend line diagonal sloping resistance point is being pierced. So now let me go through the numbers. And as we do the numbers, I'll explain what I'm looking at. The Dow is in leg C right now in the daily chart. Is that a C? Up A, B, and this is a C. And I have to make a decision here in my Chapman wave notation whether this is now actually Chapman wave 4. We're waiting for 5. Or whether that was a 5 down to 3. I don't want to make it complicated. Just make it real simple. I've been saying for quite a while the close in the 20,820s to 20,850 says that I've got to be looking at this a little bit differently because it's broken the downtrend line that's in the Dow. The one I just showed you was in the E-mini, but this has gone above the one in the Dow, and that says that if the Dow pulls back today, closes around about 20,770, it's at 20,828, up 139 right now. That'll be some kind of a failure pattern if it closes towards the high of the day, together with what I'd said to my subscribers this morning, that GE was acting very well. And the question was, is it a harbinger of a breakout? And all of a sudden, we get this spike to the upside. GE is up 24 cents. It broke that down trend line, but it's come back into it right now. The other thing was UTX, which was acting very poorly. Suddenly had a very strong candle yesterday, another one today, and is almost at the recovery highs, not the all-time high of 124.45 back in February of 2015. This is at 113.80. So we got to watch these, but so far what it's saying is the sideways consolidation has to still be termed a consolidation, even though it's a sell mode, because the weekly chart the Dow and the S&P haven't really confirmed a sell, even a sell signal per se to a sell mode. So we've got to watch this real closely. Don't want to make it complicated. These are the numbers we're looking at. So let me go back. Let me go back here. We're going to go to the S&P, SPX.X. The S&P got to that trend line. It's pulled back from that trend line. The weekly chart shows exactly the same thing. Peak A, I don't know if this is A, B, C, D. I'm not sure if it's a C or a D. In the 120-minute chart, what's really important is that if by a little later on today, by say 1 o'clock to 2 o'clock, the market's given back quite a chunk of the gains. I would have to say that's just part of this process of the consolidation. So I got a couple of questions. I'm going to go to them right away, but I first want to finish here. QQQ series did go to a new all-time high. It went to above 132.81. Is this F or F/B? I can't say right now. The stochastic at 89% and the MACD turning up. That could, in fact, be the trigger for a new move to the upside. We're just watching this. I'd say let's watch this for the day because of so many factors. I'll try to go into them a little later on. Let's just say that the QQQ, the PowerShares QQQ Trust Series, trading at 133.28 at a high of 133.39, needs to break and close below the 132 level, and it needs to do that by early next week. If it doesn't do that, this is an amazing market as it rotates with some sectors consolidating and others just continuing high. Look at this. Amazon has a round number high of 920 today. We were just talking about it the other day in the 885 level. And all of a sudden, look at this leg E. I think that what it's saying to us is that when that consolidation does come, if there's an inverted V turnaround, you will see 876 very quickly. But if there's just a sideways pattern, you could get another sideways consolidation. We'll be watching these all the time because it's now very important that the leaders are going to be the tell to see whether or not when they do finally have a consolidation, they pull back sharply and it brings the whole market down, or whether you get another rotation, and as they come down, then you've got your GEs and your Triple M's and UTX and IBMs start to move higher because they've consolidated for a little while. Quick question here. Mike wants to know about the VIX. You see the VIX index trading at 11.24. It's coming back to that trend line support, and that trend line support will be right there at $11. A close on $11 just will really impact the buying pressure considerably by saying under the 13s, it's closing under the 13s, it's bullish. Closing under the 12s, it's very bullish. Closing, that's in the 11s. Closing in the 10s, and that gives it tremendous support. It doesn't mean to say necessarily bullish in the sense that you need to break out. Now the market's going to 22,000, 23,000. What it does say is there's tremendous support, and that every time there's a moment like this, just any good news, instead of being sharply triple-digit down, which we've tried twice now in the Dow for 2 days, and not today, but the previous 2 days, and failed to hold the sharp down move. So we're seeing that the release to the upside is like a spring-loaded action. So the VIX index, if by the end of the day there's suddenly a really sharp turn, the Dows are now only up 56, the S&P is up 5.5, the VIX could then rally to 1165 or 1180, and that would be a very negative thing. So before we go on, we've got a break coming up. I want to talk a little bit about the gold and some of the commodities, as well as bonds and the dollar. We'll be right back. Basil Chapman, Dow's up 142, S&P's up 13. Be right back, and I'll get to the questions.
If you're looking to unearth a new financial resource and diversify your financial portfolio, consider the new market-safe core commodity CD from Everbank. This 5-year U.S. dollar-denominated CD gives you exposure to 4 equally weighted commodities: gold, copper, WTI oil, and sugar, in one powerful CD. With no pricing caps, you can potentially earn an unlimited upside payment at maturity if the commodities increase in value across semi-annual pricing dates. And should the opposite occur, your principal is 100% protected. Keep in mind, returns are based on CD performance. There's no annual percentage yield or periodic rate of interest on this index CD. Don't miss out. With certain commodities on the rebound, now is the time to take advantage. The March 23rd funding deadline will be here before you know it. So call 1-855-750-4051 or visit everbank.com/TFNN for the CD's term sheet and other important product details and disclosures. Once more, that's 1-855-750-4051 or visit everbank.com/TFNN. This advertisement is sponsored content. Everbank is a member FDIC.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Basil takes your phone calls. Now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Folks, we're back. So we're looking at the dollar at 100.58, up 4 cents. Having a little bit of a high-level consolidation here. It's been close to these levels for about 4 sessions, just hugging the top. What's really important about this is that the weekly chart is sitting on the 9-period exponential moving average as the stochastic just is trying to turn up. The MACD has not fallen as dramatically as you would think with such a sharp move from the 103, what was that, 103.70 something, 103.82 high back in early January, and coming down to the low of 98.86. So what we're looking at here is a nice retracement, but putting into the context of, let me get rid of that, putting into the context of the monthly chart, this is a high-level consolidation, so far very positive. So let's go to gold and see how we can get a relationship of, remember, every year there's maybe 4 or 5 weeks where the trend of gold and the dollar move in the same direction, either up or down. Otherwise, they're almost always in counterpoint. What's really important about this is that the gold is held very well, even though today's not a great candle. It made a peak E with today's pullback, and it's right there. You see this dashed trend line in the daily chart, weekly chart. Now let me just raise this because we've got slightly higher levels. We'll go to there, to there, to there. Yep. And I want to be conservative, so I like to go to candles, more candles right there. So that takes you right to the 200-period moving average, 1.276 in gold, 1,276. And we're at 1250 right now. And it's kind of not stalling, it's just going sideways. Oh, I guess that's stalling. But what is most important, it didn't take out, and it should have done that yesterday, it should have taken out the high of 1268.1 made back in the week of the 3rd of March. It stalled under it, and today's high is under that again. So I'm looking at this and I'm saying very interesting that gold and dollar moving in the same trajectory, not in the same percentage, but the same trajectory. But even more important than that, neither one is breaking down. Dollar is showing strength, gold is showing strength, although the technicals are way weaker than it was back when it made that peak D high. That was the 27th of February. So that always says to me, hey, be careful. But remember, price is an arbiter of a trend. You can have all the technicals you want. You can have lousy unbalanced volume. You could have huge volume. You could have Fibonacci's. You can have Chapman Wave 5. You can have anything you want. The price is telling you that it's holding pretty well and that the stochastic's still at 80%. That's good. The MACD is still good, but way lower than it was, but it's still good. The histogram is still slightly positive, and that unless gold follows the technicals, it means that if the technicals start to strengthen, once again, it'll give buoyancy to this, and the 1241.8 level is key. A close under 1239, that's in gold, immediately would suggest to me breakdown, and I would be looking to see, does the dollar break out and get into this ugly candle, the one from the 15th of March, 101.76 high, 100.49 low? Is that going to be the target on the upside? Or does the dollar start to pull back because gold suddenly has a big spike to the upside? What I'm looking at here is that I'd spoken about this both in the TLT, that's the Lehman 20-year T-bond fund. That was the yields that we were looking at, as well as gold and silver, gold and the dollar. And what I'd said is, for now, I believe we're in a trading band. And that trading band might be a little bit wide, but it's still within the range of the up and down that it's been in. All of them have been in for a while. So that, just keep that in mind. What is the big thing? I mentioned to my subscribers this morning to my opening call. We've got 4, maybe 5 elements here that are really important. These little elves. So the elves are VIXY, Bondy, Goldie, Dolly, but I added Oily because I think that what we're looking at here is that as we're looking at these various sectors, we want to know which are the ones that are going to break out, not stay in the range, break out. And I'll get to that in a moment where we've got Larry. Oh, Pasavento. I'm sorry, Larry, you've been waiting there? Hi, Larry. I think that's it. Larry has a question, and I'm not sure if Larry's there or whether it was a question. What's the question? Maybe I should see if there's a question. Ask my engineer. Is there a question? Is Larry there? No, I haven't got it yet, or maybe Larry just got tired of hanging on. All right, well, as soon as you get the question, I want to know what the question is. And I'll be keeping my eye on the message board here. So let me go to the oil, and I wanted to show you something very interesting. Oil spiked up this morning, and it's at 51.10 right now. It hit 51.88. Now, within the context of 51.88, the 200-period exponential moving average is right here at 51.65, and the 200-period moving average is at 52.25. I like the action of oil going into early this morning. Reason being, we've spoken about the trading ranges, and crude oil has been in this 47s to the 53, 54 area trading range for quite some time. And because of it, it's helped some of the, look at this, ExxonMobil, let's see where that is right now. Yeah, it had a spike to the up, gapped up to the upside at 82.76. Chevron, CVX gapped up. It's at 109.38 right now. It hit 110.67. So what we're seeing here are these inflection points that are triggers. And as they come into some kind of support, boom, you see a bounce to the upside. How all of these indexes, that's bonds, volatility index, gold, and let's include oil for the moment. And I'm missing one, VIXY, Bondy, Goldie. Yep, okay, and gold. How all of these are closing on Friday, let me put it this way, is going to be really important for a number of reasons. If there is a breakout, in other words, let me go back to gold. If there is a breakout in gold, either to the upside into the 1270 or higher level, 1270 or higher, and it's at 1250. 20 points shouldn't be a big deal for gold at any stage. But if it can break above that, then all of a sudden you've got leg C in the weekly, and the technicals would be very strong. A $20 pullback from here going to the 1230 level would be very negative because it makes the arch formation and make this like a triple top here, a declining triple top, and that's going to be very important. If I go to the VIX index, at any stage, if the VIX index, which is now at 11.29, if it takes out the 1070 level, that just says, it's going to the all-time lows area. This should make for a breakout to the 21,300 level, 21,300s in the Dow, if it does that. So these are the parameters. But if all of a sudden, through whatever bad news it is, or whatever news is taken badly, if the VIX starts to trade in the 13s and closes there, it's got to do that. It just doesn't close in the 13s. If it does start to close in the 13s, we're looking at a deep consolidation. Okay, we've got Larry on the line. As soon as we're back from the break, we will have Larry Pesavento. He's got a question for me. I'd love to answer if I can.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi everyone, Basil Chapman, Dow's up 114, S&P's up 10, and we're going to go to Larry Pesavento. My honor to be able to have him as
well, you have that wrong. It's my honor to be on your show, and I need to ask you a question because there's only a few of us old-timers around that can remember any of this. But
yes,
my first question is, Basil, we've been in the markets for a long time. Did you ever study fundamentals? Do you still do? Or someone asked me that on the radio show today, and none of my friends have ever gone that direction. I just wondered if you did it at one time.
I used to in the very beginning. I didn't necessarily study the fundamentals, but I did take them in, and I considered them to be important avenues of exploration. And until I started to, when I was getting barons every week, I would find that whatever was being discussed as very important was very important just for a moment. Like you remember, there used to be M1 and then M2.
Oh, M2,
and that was Thursdays, and we would wait for it with bated breath.
Yeah.
And then the moment the news came out, like an hour later, we were looking for the next thing.
Yeah.
So, but I tell you one thing that I have learned, and I've tried to keep it in mind. It's very hard sometimes to do that. That if, for instance, some of the very best stocks that we've seen have had very good fundamentals, and I think if one can marry the fundamentals together with the technicals, I think you have a slight edge. But when you're getting to an area, for instance, Amazon right here is breaking out, and Amazon, by every metric that I hear people measuring it, they're walking away with the prize. But at the same time, on a purely technical level, they're getting overbought. Now, how do you put those things together? Because what happens sometimes is that the technicals start to falter, and it's a sudden bad news event that brings the stock down sharply, then everybody recognizes it. So I like to say that what we try to do in technical analysis is we do an X-ray or an MRI of the patient. But my wife's a physician. I know that some people can look just terrible, and they just keep going along. And that's the same thing with the technicals. So I think if you can try to put the two together, I like to do the X-ray of the patient. If I see that there are faltering signs technically, then I try to see if there's some fundamental reason. But mostly when you're trading a 1 or a 2 or a 3-minute or a 10-minute chart, there is no room for fundamentals. You have to do it purely on a technical basis. I don't know anyone who could do it purely. If you do it on a volume or whatever it is, that's a technical aspect. So I don't know if you can just do that on news, but the answer is I really don't. And not only that, I don't remember all those fundamentals. My mind is always on the technical stuff. You know what I mean?
I understand. One other question that I have is we just had Fred Blacker, pull a hoodwink on us. I have never heard of anything as absurd as this in all of my 60-some years of experience as a Fed governor. Doing something like this. This is really an insidious thing, in my opinion, because they don't even address the problem. They should have a news conference on this. This is terrible, in my opinion.
Wait, this is the leaked news? The leaked?
Yeah,
Yes.
This is about Fred Blacker, the Richmond the Fed president that shared information with a hedge fund.
Right.
I just don't understand how they cannot come out with some type of a because they're supposed to be beyond reproach, for heaven's sake.
Beyond reproach, absolutely, yes.
No,
And there are a couple of things that are happening here that I don't think we've ever heard of as news events so publicly, but I bet that it was just going on all the time. It's just that there is. Do you know what I'm saying?
I agree. I think it has been. It's a private bank. Why wouldn't it go on all the time?
Right. So human nature doesn't change. So what we're looking at is that all the news events that we are listening to now, and people have their eyes wide open. Some of us have been following this for years. It's always been there. It's just made more noise now. But human nature is not going to change. People are going to do the same sort of things, same mistakes, the same good things, same bad things for the rest of civilization. That's just the way we are. So That's the reason why I think we like to do technical analysis. We can just get our minds away from all of that and see what the charts are telling us.
All right, my friend, listen, thanks a lot and keep up the good work and stay warm. You got spring coming up. You got those 2 days of summer, August 2nd and 3rd.
You know that very well. This is that one day that's fantastic. We're going to bottle that.
All right, we'll see you later, my friend. Thanks, Basil.
Thank you, Larry. Fine, bye-bye. So, folks, we're looking at the Dow up 124, S&P's up 11. Now, this is really interesting because, we're talking about a fundamental analysis. I know Larry's made some absolutely fabulous calls lately. I was listening to him just the other day, and he was talking about the DAX and just nailed that DAX so beautifully. So, yeah, we've got to be doing what we do best. So, here, let me answer some of the questions that we got. So, Bob said the transportation index put in a bearish outside reversal candle on the monthly. So let's just look at that. So the IYT, which is the iShares it's the iShares Transportation Average ETF, has made a peak C in the, so far, leg C, because I have to wait for the entire month of April to conclude. But so far, it's a leg C in the monthly, a D in the daily, and it's gone from the 170, almost 174, down to 158s. Bounce to 164, a very quick peak A to peak B to peak C to peak D. That invariably says there should be a sudden slide, not a major sell signal or anything. It says a sudden slide, and from there you can assess whether it's going to go above D or whether it's going to make the arch formation. So I'm watching that real closely, and the weekly chart says, yeah, this is a little bit of a bounce and it should come back down. So the question is this an influence outside of the previous candle? Does this mean the Dow will follow into serious downtrend? So far, Dow looks like it could chop around like in January. So the answer is, I don't do, we're talking about with Larry about fundamentals. I don't do the Dow theory together with the transports. I kind of keep it in mind, but I know that over the decades that I've been looking at it, there are so many times where the signals conflict, or they don't quite agree, or they are absolutely in sync, and then other things happen. So I'm not an expert in Dow theory in terms of that's the relationship to the transports. But what I can say is the transports are very weak, and that says to me it's another reason for saying I want to remain, at least for now, somewhat cautious. And that's the way I'm looking at it. So if the transports at 164.85 push into the 166.70s by next Tuesday or Wednesday, that's going to be a positive. But it's still quite a serious consolidation from that peak D in the weekly. But if it breaks down under 162 within the next few sessions by maybe Wednesday or Thursday of next week, then we're looking at the H pattern. We should be coming back to retest the low in the 158 area, 158, what is that? The 158.18. So that's the first question. Next question is a statement, I guess. Wow, where's the correction? Kevin says, don't tell us how you've been thinking about going along on the radio. No, going along certain positions, absolutely. We tried this morning. I don't mind. I said, this is a market where I want to be going long and short. But in the marketplace, we are still short the Dow, we're still short the S&P. That's our positions, and we haven't been taken out yet, and that's the way it is. No, I think there's a little more time needed, and I'll be wrong. As I say, if the Dow really pushes quite a bit higher, closes in the 20,850s or 70s or something, I'm going to say, hey, this could actually move a lot more. But in the meantime, I'm staying in these positions. I'll be back and we'll cover a couple of other questions. Greg wants to know about SHOP, and I'll look at that as we get back, SHOP, and we'll look at that.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Hi everyone, just to show the 2-minute chart, you have the E-mini made a peak F top right there. I can't remember if I did that. Back at 10.22 this morning, 23.75, round number high. Pulls back to 23.65, and now it's trading at 23.70, and it has until 11.48. So during the next 15 minutes, it has a time in which to try to get to 23.73. It's at 23.69. We'll watch this real closely. All right. And here's the 10-minute chart. There it is. Now, this made a peak G-top, and it's pulling back. So we're going to be watching that as well. So we're going to go to Shop, which is Shopfly Inc. This is an e-commerce store trading at 69.01. So Greg wanted to know... Morning, Basil. You asked me to send a reminder to look at Shop during the Today Show because I ran out of time yesterday. I have a small position that I will hold long-term at 32.20 to 32. Oh, my goodness, very nice. I have bought and sold a couple of positions and would like to add again. What are your thoughts on support levels? Thanks, Greg. Greg, so this is what I'm looking at. I've seen this pattern so many times. What stock were we looking at today? I mentioned in my opening call. Oh my, CTAS. Yeah, Syntax. You see, spike up, make a little flag formation right there. Oh, I could just go on and on. Was W another one of those? No, W wasn't. A, Agilent. There are. Agilent, same thing, spike up. Fantastic company, but it's just consolidating here. Trading at 53. See that pattern? So let's go back to Shop. It's the same pattern. I love when patterns occur in all different. Look, I just went from essentially a tech stock that does analysis. That's Agilent to better your services. I went to CTS, which is Syntas. This is the uniforms and overalls. And here we are at Shops. And these are all different areas, sectors of the economy. So this one says, I'd be a little careful here. I think it needs to consolidate sideways for a little while. I wouldn't be adding. I'd love if it pulled back because it's in I'm pretty sure this is not a G, but this is a C in the leg C in the weekly chart and a leg D in the monthly chart. I would love if this pulled back between 65.50 to somewhere right there to 63.50, somewhere in that area, and then just held tight. Because if that's the case, I might think that it's another buy to be able to go to leg D in the weekly chart. If it starts to rally from here, it's kind of tough because just on a very short-term position, you can get in at 68.97, but it might start to make the arch formation and start to fade at 71.55. Nice few points if you're interested. So, Greg, stay in your core position. Don't even think of touching it. But I probably would hold off adding right now because of the way you've done it. This is the candle I'd be looking at, the candle of the 22nd of March, high of 67.48, low of 64.75. Just in that area, let's see how that holds, and then email me again. Let's look at it together. Now, the only other thing I would say to you is because you have you've got more than a double. If you wanted to start just a very small position at this particular point, there's only one reason why I'm saying that. You see the rush, the flush of sudden buying. We've seen selling come in with buying, and we've seen buying being met with buying even today, with the selling coming in from the 170 or 180 area, almost 200 up on the Dow. Then it came back to only up 100 and something. Now it's at 142 up. So it seems to me there's still a lot of buying going on. If you want to think that this is going to be a trigger for this particular stock to move 2 or 3 points, you could nibble on it right here. But I tell you the truth, it's had its big move. It needs to consolidate. It's the same pattern we've seen in so many stocks. I think it's going to test the low that was made 4 days ago of 67.05. And if it takes that out, it could quickly drop. So I'm just saying, I would hold off. You've got a fabulous position. I know that you'd like to add to it, and I too would like to look at it again. I don't see any sell signals yet other than shorter term. And the weekly chart, monthly chart still looks good, even though it's leg D. Hold off on Sharp, but in other words, set aside some money because that's where you want to put it on a pullback. All right? Now, the only thing that would make it a very serious decline is if today's Wednesday, if by Friday, I don't care what the reason is, if by Friday it takes out this low in one big swoop of 64.75, that's not good action at all. Then I have to talk to you. Then email me because I don't want you just jumping in at that point. So let's just see how it consolidates over the next, I'd say, 3 to 5 sessions. Now, the next thing I had was a question about, it was earlier on, OIH. Judy wanted to know about OIH yesterday, and I'm not sure I actually did the OIH. You see, this is a spike to the upside. So let me look at USO, which USO is the United States Oil Fund. Look at this straight up move. Even though it's kind of a reddish candle today, it's only up 4 cents at 10.75. Look at the way the stochastic went to 92% and the MACD spiraled higher. This, to me, has a chance to be a Chapman wave breakout formation. So 9.88, 9.88. So this is ABC. This is leg C. Pity. I was going to say, this is the pattern that takes you very quickly to a peak C. Then the stochastic pulls back a little bit as the MACD takes over the momentum. Stochastic is the torque. First gear, second gear, third gear. Gets you into the momentum, and then you get the MACD takes over the momentum. And that says, yeah, it could pull back a little bit, but it should make a D. In fact, with this kind of technical veracity in the daily chart, the USO suggests to me that if it can close in the 10 point, what was the high today? 10.89. If it can change, it just has to touch once, 10.97, just even touch it. I think it has 11.12, the 200 period moving average is the next target. This is the candle it was gunning for, and this is the candle it's in. The candle of the 8th of March, horrible candle, opens at 11.22, which is almost the high, and it goes down to 10.62. That's the candle that it's trying to head for. And I love when gaps are filled on the upside and stocks or indexes, whatever it is, go deep into an ugly candle and start to tackle the high of that candle. Okay, next question is, to Chapman wave, is S&P a falling axe? Yes. Oh, is it a breakout? Not yet a breakout. Let me explain what I'm talking about when I say yes but no. You see this line? Let me make this real nice and big. Here we go. Open it up, open it up, open it up, up. There we go. Okay. 2400 was the high. Well, it was 2400.90 something on the 1st of March. That was at leg D, and peak D was formed the next day with an inside bar and then a breakdown. And then you have little U formation that made the right shoulder failure, another collapse, with an arch taking out the left side low. And now we've had leg C to the upside. Leg C to the upside with the MACD attempting to turn around. The histogram still at minus 0.81. But look at the way the red line is flattening. But look at the green. We're in a W formation starting to try to move above it. If it deflects lower, that's going to be very negative. But at this particular point, that's the reason why I said this morning to subscribers, yes, if there could be a balance if the oil stocks help and if GE continues with another good candle and UTX follows through. Well, we've kind of got that. And what's really important about this is you see this trend line. Let me make it a color here. I'll make it green, and then I'll put an inside track, Chapman Wave inside track below it to show you this is the containment area right here. I'll be back. Basil Chapman, Tiger Technicians out. We'll talk about the falling axe formation. All it is a descending cone. And I'll be right back. Basil Chapman, Tiger Technicians.
Hi, I'm Steve Rhodes, host of the Trader's Edge heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Learn how to trade options with swim lessons. Brought to you by TD Ameritrade. Think or swim. Next on TFNN.
Hi, folks. Listen to the great programming coming up. We've got Think or Swim coming up at 12 and at 1 o'clock. You've got Steve Rhodes. You've got Dave White at 2. Tom O'Brien back at 3 to 5. So let's look at this. So the question was, what about, so here I've got, let me just see, can I see that very clearly? Yes. So I'll make this a little darker, make it color green, make it this green. That, now it looks too dark. You see this resistance line, and you see the Chapman Wave inside track repellent zone. We've gotten into that in leg C. This could still go to a D if there's a crossover, positive crossover in the MACD. That'll be very positive because you can see what happened as the green line was below the red line. you've been consolidating. Once it breaks above, that's going to be good. The stochastic's still only at 60%. That says to me, I got to watch this real closely. I'm watching to see if there's a failure or not. So make it simple. A close in the S&P is at 2373. If it can get to I'd said before, the 2383 level. If it starts to get to 2383 and it's tackling the high that was made at 23, what was the high today? 2378. Yeah, if it can get to 2383, then there's a chance it's going to try to tackle the high that was made on the 15th of March of 2390. So let's go one step at a time. Day's young. Anything can happen. So far, you've had your rally, you've had your pullback, you've had another rally, and this is the rally that's going to be very important. So while I'm doing this, I just want to show you trend lines are very important for me. Wheat has gone to it made a peak G/C way back there on the 16th of February. It's pulled back trough A, B, C, trough D, E, F. This is trough F, and it's starting. Look at the way the stochastic and MACD have moved up. You haven't really got the price movement yet. So until wheat, which is at 428, up 1, until it can close decisively about 434, it's kind of stuck in this range because it should have used these good technicals to break out, and it hasn't. So watch it real closely. And another question I'd had is, so that's wheat, continuous contract, and here's the soy. It's a nice candle today, and this is the first time the candles come with the on-balance volume going to the lows and turning up. So watch this closely, because at 946, up $8.25. If 957 is the 9-period exponential moving average, a close below yesterday's low of 936.5 would be very negative. So keep that in mind. As long as it holds that, keeps pushing higher, this is going to be a nice potential turnaround. What was I looking at before they gave such a nice signal? Wheat. And there it is. No. Okay. So now let's do what we want to do just before we wrap up for the day. Let's go back to the VIX index and let me show you. So the VIX, here it is. This is the daily chart. It's getting closer and closer to this key support level right there. And it's just a trend line that's held before. If it breaks down, it means that the VIX has gone under 10, under 11. Starts to close on 11 today and tomorrow. That's going to be a big boost for the market. If by the end of the day it's just a bit of a turnaround, it goes to the 1160s, the market gives back and starts to go under 85 in the Dow, so plus only 85 instead of being up 141 right now. The S&P goes to only a plus 8. You'll see that VIX come back a little bit. But until the VIX is trading in the 13s and until the futures open 15 points lower, and every rally intraday is met with selling, and it closes triple digit down in the Dow, double digit down in the S&P. That's bear phase, and we haven't had a bear phase. We had a couple of days, like 1 or 2 days, in the month that we've been consolidating, but we haven't had that. And until we get that, got to watch it. So Paul says, what about Amazon taking business away from everybody? Yeah, I'm watching Amazon real closely. Now it's at 922. I think that this leg that we've got to the upside, I've got to watch it closely. Is this the beginning of a move or is it the end of the move? Because the MACD and stochastic are outstanding right now. So I think we're going to have to wait. We're going to have to wait for the evidence to see when will Amazon start its consolidation. When it does, the Qs for the first time become somewhat vulnerable. And the Qs right now broken out, like F/B. I'll be back tomorrow. Have a great day. Check out my opening call.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
This is TFNN.